One factor in focus is the shelter index, which was the largest contributor to inflation for November, rising 7% from a year ago. But the question is, could we finally be seeing a peak in December? Let's bring in Dennis McGill, Director of Research at Zelman Associates. And you guys, Dennis, do your own rent trackers that come out before CPI that everyone pays attention to, especially the macro funds. What are you showing?
Yeah, thanks, Sarah. We do have surveys both for the multifamily and single family rental sectors that we're doing every month. And importantly, they include both new move-in rents as well as renewals. And a lot of the different data out there is unfortunately just limited to new move-ins. Our data is showing, like others, that there is deceleration. For tomorrow, we think the seasonally adjusted sequential change in overall housing CPI, so that's going to be both rent and OER, is about 54 basis points. That was 70 basis points for the November reading, so you are starting to see that ease a bit. We do, however, expect over the next couple of months that it's going to stay relatively elevated in that 40, 50 basis point range. So I think everybody expects deceleration based on what some of the asking rent measures are doing. Our view is that deceleration is almost for sure. The question is how quickly that deceleration unfolds.
So just to be clear, you think we have already seen the peak in those rent prices, shelter prices?
Absolutely. And I think that the peak was ultimately in the true market was about 3 or 4 months ago. What we find is that the actual fundamental data leads the Fed's data by about 3 to 4 months. That is our data that captures both renewals and new move-ins. You started to see operators take the foot off the gas on rent increases really around that July, August timeframe. And that's now starting to filter into the government's data here in November, December.
So you pose the question, how fast do you guys see it coming down from here?
So we do expect, like I said, it's going to ease over the next couple of months. If you think about that on a seasonally adjusted basis, you're still going to be over 5% by our math in the first quarter. That's an average for the full first quarter. Part of that has to do with the lag of the fundamental data, the government's data. The other factor is that wages are an important undertone to what happens with rent prices. And our view or our work historically has shown that you tend to have a bit of a lag from when wage growth rolls over before rent growth. And you're still seeing, as you know, pretty strong wage growth out there. So we do expect deceleration. I think by the end of 23, we're still looking at 4.5% increase for the fourth quarter. That's on a year-over-year basis. It's not until we get into 24 that we think you're going to get back towards that 2% type number.
So what about the supply issues that have kept housing prices inflated here? Because it hasn't all been about the Fed, is it?
Well, clearly mortgage rates were the biggest driver by far of the excessive price appreciation that we saw. We don't really subscribe to the same type of pent-up demand and housing shortage that others do. It was very much a mortgage rate driven factor. And that affordability hangover is very real today and very significant. So home prices by our math are going to be down double digits over the next 6 quarters or so. We've already seen about a 5% type decline so far in the second half of this year. And supply, both across single family and multifamily, rental and for sale, is going to be very significant as you move forward through the rest of this year into 24 as well. So we're not arguing that there's going to be undermining of the growth that we've seen on the rental side. Supply is going to be a big part of that. And one thing to keep in mind is that occupancy rates in the rental side have actually been under pressure so far this year or in 2022 throughout. And that's on a seasonally adjusted basis. And that's with all the pressure that there was on for sale affordability. So there's other factors going on, some unwind from the pandemic related to people getting back to one residence instead of two, having a remote place and a permanent place. And we think that that's been undermining some of the demand measures as well.
Home builders are having another good day, up 2.2%. Dennis, thank you very much.